So, update to my basic trading strategy. I'm still in the process of like essentially what's the word? Tweaking this. This is my slightly new approach. I want to say like a lot of it is the same stuff as my last video. This is generally a similar approach, just looking at maybe more validation for how the daily bias should play out. You know what I mean? So rather than just looking at like the fact that we're in a bullish fair value gap, I have multiple things. I have a couple other things that I need to see before I potentially take like a bullish trade on in from a bullish fair value gap. Like for example, I might need to see a liquidity sweep plus SMT, which is similar from the last plan I had, but I might need to see like a two-stage SMT. So I might need to see two SMTs. Whoa, why can't I speak? I might need to see two-stage SMTs. I might need to see an SMT and a PSP, along with a change in state of delivery. So I'm kind of using like maybe 2 to 3 things to confirm that we're really going up. So that's basically just it. But my current way of approaching the market, which does align with the previous plan. First of all, I'm going to say this is technically GXT logic and for the fractal model. Basically, GXT logic is essentially just having a framework or the logic of looking at the market depending on where we are in the market at a certain period of time, and basically classifying what could potentially happen based on where we are, right? So that's GXT essentially. And then also GXT is also looking at those multiple confluences that essentially validate why we should go in a direction, right? And then the fractal model is essentially just, price is fractal. What happens on the daily as we're going up is going to happen on the lower time frames, right? So power of 3. So if you go to your 4-hour candle, you should see that at the 1800 candle, we should see an open high, and then as we progress to the 2 o'clock, 10 o'clock candle, we should see price go up if we're bullish on the day, right? And the same thing should be seen on the lower time frames. That's what the fractal model is. Like for example, if you're entering, like let's say you're entering at 950, right? What you'll end up seeing at 10 o'clock, if we're respecting power of 3, you'll see a retracement at that 10 o'clock open. So maybe sometimes that can be what takes you out of the market depending on where you enter, and then a move up. So if you take into consideration that we could come back and retrace before that 10 o'clock candle goes up, you can better adjust yourself or position yourself so you don't get taken out of the market and you can actually ride that trade up and so on and so forth. So that's just some things to take in mind, but that's basically what I'm basically doing. I'm looking at the weekly time frame kind of really quick, just seeing where we are time. Are we most likely going to be bullish on the week, bearish on the week, just having a weekly expectation and just kind of having a basic understanding of how each of those days can play out, right? So we're going to see if we're expanding toward a key level. That's also very useful. What is the long-term draw on liquidity? And determine a weekly bias, bullish or bearish, just based off the weekly. But the thing is, as you go down in the time frames, your bias could change based on what you're seeing. Oftentimes, when we're coming into the day, we want to see a confirmation of our bias. We don't want to just trade bullish just because the daily chart is going up, right? We want to see confluences, reason to support that, and that's what we're looking for. We're like detectives trying to find clues to solve a problem, right? That's just basically what we're doing. We're detectives and we're trying to find signatures in price that support why price should go up or why price should go down, essentially, right? So then after that, we're going to look at the daily chart and we're just going to align our bias to the weekly, right? So as you know, the weekly candle is going to be power 3. It's going to go down first and then go up. So coming into Monday, right? Let's say the new week starts on a Monday. We're aligning the daily bias with the weekly. I understand that we can put in the low of the week very early on. So I'm potentially expecting Monday or Tuesday to put in that low of the week, and then for maybe Wednesday and Thursday to expand. But based on how that weekly candle develops, I can possibly go in with an expectation on how Monday, Tuesday, Wednesday, Thursday, and Friday will behave. Like, for example, if we're coming up on the end of the week, we're probably, not all the time, but we're probably not going to be making newer highs or newer lows. We might just be coming back into the range, or I won't say we're chopping around. I like to look at it as coming back into the range. So I won't be expecting any crazy price movements on a Friday, right? So that's what I mean by aligning the weekly bias with the daily bias, aligning where we are on the week with the daily candle and what are our expectations. I think ICT has a video on this on daily profile. You should definitely go check that out. It'll give you a basic understanding of how to look at that price progression through the week and what we can expect going to each single day, every single week. That's why you'll see traders have their weekly analysis coming into Sunday. They'll look at the market and, come up with an expectation based on what they want to see in the week. And some people won't trade Monday because they want to see what has Monday done to inform the rest of their decisions during the week, right? I do trade Monday, but I don't know. I don't really like trading Fridays, that's for sure. I think Mondays and Fridays can be a little bit tricky. I usually have the most luck with Tuesday, Wednesday, and Thursday, but Tuesday, Wednesdays, and Thursdays, primarily Wednesdays and Thursdays, can be a little bit weird because we can see midweek reversals and yada yada yada, all that type of crazy stuff. I highly implore you to check out ICT's weekly profile video. I'm actually going to rewatch it just to get a better understanding of the weekly profile. And yeah, so you're aligning the weekly profile with the daily profile, and that leads us into the next thing. But first, let's read this. Align the daily bias with the weekly bias. Look at what day we are on. Each day can behave a certain way. Our job is to predict with a high level of accuracy what price can do on any given day. And I'm going to add that on any given day, right? So then we're going to go down to the 4-hour chart. And then 4-hour chart, we can basically see how that daily candle is developing. So in a daily candle, there are about 6 4-hour candles that make up that daily candle. So we can look at where we opened, where we currently are in price, and we can get an idea of maybe what price wants to do just looking off of the 4-hour chart. Have we put in the low for the day? Have we put in the high of the day? Where are we based on time, and what can we do? And then not only that, once we're on the 4-hour chart, we can potentially, the 4-hour or 1-hour chart, we can potentially apply a GXT logic or framework based on what we're seeing at that given period in time, right? Coming in on the 9:30 open, or primarily doing that analysis maybe 30 to an hour before market open and just seeing what could potentially happen on the day, right? So I'm just going to read this. Look at where we open on the day. Apply how I confirm narrative with drivers by GXT on YouTube, and try to classify the framework based on what happened prior to 8:30 a.m. news, if there's news, and 9:30 open. This can oftentimes influence how you're going to trade the market based on this 9:30 open, and how you could potentially trade this news as well, or position yourself for that 9:30 open. Then we're going to go down to the 1-hour time frame. We're going to take a closer look at how the daily profile develops. So we're going to kind of get a closer look at how these 4-hour candles develop. But not only that, what we're going to be doing on the 4-hour time frame is, well, I guess that bleeds into the next part. So let's just go to this bullet here. On the 1 hour, starting on the 1 hour, we're going to be looking for any SMTs, PSPs, 2-stage SMTs, and 2 cracks and correlations, which is just basically an SMT with a PSP, right? So we're going to be looking for these. We're going to go from top down, 1 hour, all the way down. And we're looking for these in support of our bias, right? If we have any contradictions, then maybe price is not going to behave as we expect. Like, for example, I could come in bullish, but then on the 9:30 open, we can get a sweep of maybe a relevant high, and then we see bearish signatures, right? So we come in with an expectation, but if price is maybe not giving us the signals that support said bias, we might want to flip it, but this is very circumstantial. You have to just gain the experience and kind of figure out whether you're going to flip or not, and that just comes with experience. Can't teach you that. You just have to get enough chart time to learn that. And then second to last, I should say, then you're going to drop down to the 5-minute or the 3-minute or the 1 minute. It doesn't really matter. It just really depends on your risk tolerance. The 1 minute is more risky because it's more susceptible to high volatile movements. Is that the word? High volatility. You might not really know what's going on in the 1 minute. So maybe having a little bit of a bigger, I don't even know how to say this. Maybe having a more, how do I say this? Bird's eye view from the 5 or 3 minute might be beneficial. And yeah, so then you're just waiting for a change in state of delivery on these time frames. And then you could potentially look to enter if all your confluences have lined up. And then I think, or a propulsion block, but I think the most important aspect that I actually did not enter here is trading. If you're using correlated assets, right? Because you're trading SMT, so you're going to want to use correlated assets. So you want to trade pertaining to the correlated assets. You want to be trading the weaker or stronger asset based on your bias, right? So if you're bullish, you'd probably want to trade the stronger asset, the one that's ripping up very aggressively. If you're bearish, you probably want to trade the one that's ripping lower aggressively, right? Maybe the ones that are closer to your take profits. So this is very, very important. What I've found lately is that a lot of times my bias, it's correct, but maybe I'm not taking it on the right asset, which will then in turn lead to a loss when the other asset that is correlated to the one I just took the trade on actually met my TPs. And that's what I found multiple times. So it's really just a matter of that, and I think this is a very important aspect. And honestly, as of right now, I think this one has been like the biggest game changer, and I still have to test it out and see what the results end up being. Right now, I'm just trying to increase my rate of trades essentially, and also increase my win rate, but also get that 6% plus on the month consistently. And right now, that is my goal. I want to ideally have a 50% win rate or better, but quite frankly, yeah, so that ideally is what I want. Plus, I want, how do I say this? I want to make 6% plus on the month. So that is my goal, and that's why I've been tweaking my strategy a lot to be able to do this. And then finally, but not least, you're just going to enter and target your TPs. You're going to target equilibrium or OTE, essentially, right? You're going to target your 1 hour highs, 1 hour and 4 hour highs and lows, and your session highs and lows. Highs, session highs and lows, and data highs and lows. So data highs and lows is basically just maybe a really strong wick or wicks that are created by maybe the 8:30 news or any type of news that come out. Those are usually a high draw on liquidity. So yeah, that is basically my framework right now and how I'm choosing to trade. This is basically the GXT plus the fractal model. So this is what I'm using right now. Right now, I've seen some success. I just keep getting manipulated by not being on the right correlated asset. So that's what I'll be working on next, to make sure I'm on the right side of the trade and I'm not getting unnecessarily manipulated out of what could be a profitable trade, right? So that is all I've learned so far, and this is the update to my trading model. I'm going to see how this goes, but with that being said, my other model can completely work fine by itself as well. I believe going with that other approach will definitely give you at least 1 to 3% a month, and will give you maybe around 4 to 7 trades a month, potentially. I'm not 100% sure, but that's just been my results with it. But I believe that this model right now has a potentially to give me that 6% plus, and maybe increase my trade frequency potentially. So I will just be keeping you updated on how I tweak my approach to trading so I can achieve that 6% plus, because my original model worked and I could have just kept with it. I could have made steady gains over a period of time, but my goal is to get and buy prop accounts and be able to scale those accounts so I can make a living and make potentially a buttload of money. Hey, so that is my goal, and I will keep you updated on how I tweak my strategy to see the metrics and results that I want to see long term. With that being said, do not forget to like and subscribe. I hope you learned something. Let me know if you have any questions in the comments, and with that, I'll see you in the next one. Peace.